Welcome to The Riff, where writer and investor Bern Hobart and I discuss the major inflection points caused by technological change. Our weekly conversation covers the obvious and not so obvious ways in which markets and businesses will adapt as a result. Let's jump right in. Bern, how's it going?
Pretty good. How are you?
Awesome. Doing great. Excited to chat with you today. I want to go into your capital gains newsletter a bit. Why don't you first talk about the inspiration for why create a separate or kind of adjacent newsletter?
Yeah, sure. So I have an associate who works with me on a lot of different things, growth stuff, back end stuff. This was his brainchild, so thank you for that, Darius. And yeah, the basic idea, one of the concerns with the diff that I've had for a long time is this question of what to explain and what to leave unexplained. I always have this feeling if I'm reading, say, the Wall Street Journal and it explains what a convertible bond is, I always have this worry that there is some other fancier publication that covers the same things and assumes that everyone in the audience knows what a convertible bond is. But no one is going to have all of the same concepts in their head, and certainly am more fluent with financial products than say with tech stacks. And so the idea for capital gains was we can separate these explanations from the main text, and instead of either having a brief description of what a convertible bond is that doesn't answer all the questions that maybe everyone, the readers who trade convertible bonds for a living or have issued them themselves will send in corrections saying you're oversimplifying, and then other people who are not super familiar with finance, they'll read it and they'll still have a lot of lingering questions. So I was like, well, why not just write out the long form, like here's an explanation. And there are sites that do that, so you can check Investopedia, and you'll actually like Investopedia. The content is decent, like it does explain the concepts, and they're great at SEO. But I felt like there's more to do. So we spun that up earlier this year, and I think it was earlier this year. Anyway, it's been running, and it's a fun one because a lot of the stuff that gets into capital gains is just less time sensitive and less reactive. It's more just what is the reference that that I wish I had, and now I have it. So I talk about different lots of different things, like everything from why do interest rates matter for asset prices to why do we have this investment category of tech, media, telecom, like why is TMT a thing in the finance world, to should you angel invest or not, why do investors care about demographics, all kinds of things like that. So it's like a lot of stuff where there's not going to be some particular moment where it was definitely the most salient thing to talk about, but it gives this nice library of conceptual breakdowns that I can use to walk through different concepts. And I used to do that kind of ad hoc. Like sometimes I would write something and I'd be like, well, this piece will make a lot of sense to someone who knows what duration and convexity mean in fixed income. On the other hand, someone who already knows those things is going to just close the tab if I spend the first 500 or 1,000 words explaining them. So like I'll just do this separately. And then one problem with that was I'd realize it kind of at the last minute. And so I'd have to write 2 essays that day instead of 1, and that was challenging. So now just having this weekly schedule where I'm going to take a step back from what's happening right this second, and then write about the stuff that's going to matter over longer periods that will be good reference material. It's a good exercise, and it's been fun. Like we experimented with some different marketing things for capital gains, like having a referral program where you get bonuses for getting other people to read it and stuff like that. And that's actually worked reasonably well, and is just like another source of growth. So I think from the standpoint of the diff as a publication, I think it's like it's content that people like and that doesn't quite have a natural home in the diff, although it would be fine if it did. And then from the standpoint of the diff as a business, it is like it's lead generation, it's the top of the funnel, it's also just a place to experiment, has slightly different branding, etc. So that's why I do capital gains.
Yeah, I hope this podcast does serves those purposes too. And I like the name we the riff that we came up with. I think is
Yes, the Riff. I love it.
Is a good addition to your empire. So yeah, let's go into some of those pieces just to give listeners a preview. I actually wanted to start on the demographics piece, and before we get into it, let me actually zoom out really quick and just say one reason why VCs like me have gotten really into your content, over the last few years is because what venture investors learned is they have to understand not just venture but also macro. For there was like a decade period where you could just focus on is this a good company or not, and then all of a sudden, when things started to change in the economy, we all of a sudden had to understand what's going on and how does that affect our business.
Yeah, and macro is a really fun topic. Like a lot of these markets are like they have to be extremely efficient because there's so much money at stake. There are so many professionals whose whole job is figure out exactly what the Fed is going to do at the next meeting and what are they going to say and what have they said that's a hint and what have they said that's a misdirection, whatever. So it's extremely hard to have any kind of edge in that space. On the other hand, people will sometimes end up accidentally making some kind of macro bet. Like a lot of companies ended up being implicitly this bet that interest rates will be roughly zero forever, or they ended up being like implicitly a bet on long-term growth. Sometimes, and this is going to be less true in tech, but some industries are partly just a really big bet on energy prices. So if you're an investor and you invest in airlines, you are partly betting on energy, but you also have other macro bets like if labor gets more powerful, then you are capital in that scenario, and it usually comes out of your slice of the pie. Um, so like yeah, it's good to be aware that you're making macro bets. Annoyingly, a lot of those bets are really hard to hedge. Like I think a lot of the tech world is implicitly long globalization. We tend to benefit when there's more global access to capital, more global access to talent, when everything that is built is being built in whatever the lowest cost place it can be built is. That's been really good for us. Like, we have these nice iPhones and other gadgets, and they are creations of globalization. It's hard to imagine them being built in one country. Like, I don't think it's physically possible. At this point, you have various unique things that are only fabbed in Taiwan or only designed in Japan, etc. Of course, the software only designed by Apple in Cupertino, and also the hardware too. So yeah, it's hard to imagine this stuff without a global supply chain. But global supply chains, they're kind of new, and over the very broad sweep of history, there's a little bit of a cycle to it. Like peak globalization at one point was 1913, and then there was this long period where countries got more autarkic and trade as a share of GDP slowed down. And I think that hit a low point probably in the 50s or 60s, and then we started seeing more globalization, and it's been swinging in that direction for a long time, and has made a lot of things incredibly cheap, but doesn't necessarily last forever. And I think the other thing with globalization is just scale. That one reason an iPhone is as cheap as it is that so many people buy them, and if you have a fixed cost to designing a particular chip or designing the latest version of iOS or designing your facial recognition software or whatever, that like the software could be a lot better if you 2x or 10x the number of users. But again, if there's going to be a separate smartphone market in different geographies, then the median smartphone sold in each of those is going to be a lot worse than what we have today. There's this nice little detail in the book, Seven Eves, which is science fiction, but it's Neil Stephenson, so it's pretty good, where there's a bit, this is kind of spoiling, but it's like spoiling stuff that was widely talked about when the book came out. Like there's this bit many millennia in the future where someone mentions that that humanity has finally reached the point where they can make a smartphone as good as the ones that people had in the 2010s. And it's like it's not a question of technological limitations in the sense of can we do this. It's technological limitations in the sense of if there is a fixed cost measured in the billions to make, like, design these things and set up all the equipment to make them, you tend to pay that fixed cost more willingly when there are a few billion people who could use them versus if it's tens or hundreds of millions, then yeah, the fixed cost just doesn't make sense anymore. So yeah, that's the macro piece. Let's talk demographics.
Yeah. Why should investors care about demographics, and when?
Yeah. So the nice thing about demographics is that you see all the problems coming well ahead of time. The bad thing about demographics is that the specific demographic problem of aging is really, really hard to reverse for many reasons. And the reason I characterize it as a problem is that if you have growth in the number of households being formed, then you have demand for lots of durable fixed assets. So new households, they'll need a house. They need appliances. They will probably need a car or access to public transportation, but in the U.S. context, a car. And they buy all these things right at the beginning, and they often borrow to do it. They generally borrow to do it, and so you have this ecosystem where people who are older and have are able to save money and also have demand for fixed income assets because they're getting closer to retirement. They create this supply of money that is seeking long duration fixed income assets, and a mortgage is certainly one of those. So you have this nice balance. Now, if you have too many young people, which was actually part of why inflation was so high in the 70s, you have too many young people who are right at that age of family formation, you just end up with a scarcity of those fixed assets. So you get inflation, and then a scarcity of the capital needed to buy them. So you have high interest rates. Um, if you have a surplus of older people with lots of savings, then that tends to push interest rates way, way down. And it also has this paradoxical effect where if interest rates go down and if housing is mostly, it's this large fixed purchase of a long duration asset, the value of housing goes up when interest rates are lower. And this is true regardless of how you finance it, because you can think of, like, if someone buys a house for cash, what they're actually doing is they're prepaying for many decades of rent. They're basically bundling up all the rent that they would pay on this house from when they buy it until when it falls down and becomes uninhabitable, and they're paying up front, and they obviously have to think about the value of a place to sleep tonight versus the value of a place to sleep 10 years from now. That you apply some kind of discount rate to that because you could save your money, and this was something I did for a long time. Was just, I'm going to save my money. I'm going to buy stocks. They have higher returns, and I'm not doubling down on a bet on the local labor market. So I'm going to buy stocks and rent a dwelling. That worked. It's just there's not a lot of rental supply for houses that can fit a family of six in Austin, unfortunately, or I'd still be renting. But anyway, so if you're thinking about that setup, then one of the questions is, what is the return on my alternative investments? Like, if I'm not putting all this money to housing, and if the return is sufficiently high, then you don't buy as much housing. So the yield on housing, like the rental yield on housing, goes down, or sorry, goes up in that case. And yeah, fewer people buy. But if rates are extremely low, nothing really has a super high return, and so the exchange rate between shelter today and shelter 10 years from now gets a lot closer to parity. And at literally 0% real interest rates, you do actually have parity. Like, you are actually indifferent between when you get something, because in financial terms, it's all is this endless present. And so that tends to raise housing prices, and then you have this very nasty feedback loop where one thing that delays family formation is people either not owning a home or worrying they'll never own a home. They just seem to be more comfortable having kids if they feel like their housing situation is pretty secure. So if you have an aging society, you tend to get lower interest rates. If you have lower interest rates, you tend to have expensive housing. And if you have expensive housing, you have fewer kids, and therefore an aging society. So you can get locked into either one of those equilibria. Um, and it's pretty tough to get out, because to get out, like, if you ignore the money part, you assume that we are not either in this overheated, GDP is above capacity, or in a recessionary slump. If you assume we're kind of close to the midpoint, then anytime you change policy in such a way that family formation is more affordable and so more people do it, you're actually lowering the standard of living for everybody else temporarily. So you're making one set of people worse off in order to transfer resources to young families who are going to spend those resources on kids, and those kids will eventually grow up and be taxpayers and all that nice stuff. But for the first 18 plus years, they are a net cost, and that cost has to be borne somewhere. So you end up accepting, basically with this trade-off between future standard of living, which is a lot better if there's kind of balanced demographics, versus current standard of living, which is better if we don't tweak things in favor of young families. Um, and then thinking of the politics there, one thing to think about is voter turnout rates. So young people basically, I wouldn't say they don't vote, but young people vote a lot less. Older people vote a whole lot more. I think last time I looked at this, millennials were actually a larger generation in terms of just headcount than baby boomers, but would not be a larger share of the electorate until I think 2032. So there's this long period where politics is going to cater more to the interests of people who don't have kids and who generally do own homes and kind of fine with like the status quo works pretty nicely for them. And politics partly for voter turnout reasons. So like partly it is the fault of my generation, but the political system is going to weight the interests of younger generations a bit less. And then there are like epicycles there where you could say, okay, well, even if that's true on average, we also need to think about who actually makes decisions, at the level of what is this campaign going to emphasize, or what legislature gets introduced this session. And a lot of that is actually determined by millennials and Zoomers who are congressional staffers and who may have this totally different mix of political opinions. But you also have a selection effect there where if you really, really want to have kids and have a family and you want to do it right now, one thing you definitely should not do is get a job working as a legislative staffer or working on a campaign. Like, you probably won't be able to afford to have kids for a long time. You won't see them if you do have them. It's just a bad call. So you end up with this terrible selection effect where a lot of the people actually involved in crafting policy are also just a demographic that's not going to care as much about this stuff. So I think there's like this sort of gradual slowing of the economy as things get older, as the electorate gets more cautious, as the interests of people who've accumulated a lot of capital, not in the sense of like the super rich, but in the sense of like upper middle class people who are close to retirement, like their interests are very well represented in Washington, and they're nice to, like, they're not bad people. Some of my best friends are upper middle class people with lots of money, but not plutocratic level wealth. But they do have different interests than maybe the long term interests of the country, or the long term thing that's best for the economy. And we should keep it in mind. I'm not sure if there are, you can always imagine political solutions to this. There's also just the cultural solution of, okay, if someone is actually going to have a lower standard of living because of these demographic issues, maybe it is fair for the parents to be the ones who bear some of that burden. And that's certainly, like, it's the case for me and my family. Like, we would have more money and more time if we didn't have kids, but then we wouldn't have kids. So not a great trade.
Hey, everybody. Eric here with a word from our sponsors. The Riff is sponsored by my longtime partners, Secureframe, the only compliance automation platform with AI capabilities that helps customers speed up cloud remediation and security questionnaires. One of the things I love about Secureframe is that it takes this time-consuming process that every company has to do in order to unlock revenue from other companies and makes it easy and simple. Secureframe empowers businesses to build trust with customers by simplifying information, security, and compliance through AI, not wasteful human hours, by automating manual tasks related to security risk and compliance. Secureframe allows companies to focus on growing their business. Thousands of fast-growing businesses use Secureframe, including AngelList, Ramp, and Coda, to expedite their compliance journey. I believe in them so much I invested in them. If there is an acronym that your company dreads, Secureframe can help. Sign up for a free demo at secureframe.com/riff and mention the Riff during your demo to get 20% off your first year of Secureframe. The best argument I've heard, or best critique I've heard of sort of the longevity movement, is this idea that think about how bad the gerontocracy is now, and how much worse it might be if people were living a lot longer.
Well, that's that. So I think some of this depends on, because like the concern with gerontocracy, it's partly this concern of the same people have been in charge for so long, and it is surreal to read books about political figures in the 70s and 80s and see the names of people who are still in office today mentioned as, like, young emerging forces in the Senate or the House. It's extremely strange and disconcerting. But if they're able to keep operating at a really high level, then gerontocracy is not as bad. If they've been accumulating their social networks and their institutional knowledge and things, and they've just had more years of compound interest, then that's really good. Like they can actually get things done. I think the problem you end up with is if they've accumulated a lot of good connections and they understand the institution really well and they're slowing down, but no one wants to say it and no one wants to admit it. Like we've all seen the video clips of people having issues, which are the kinds of issues you would expect someone to have at that age. They're just not necessarily, they're generally not going to be as sharp and on point all the time, but they have pretty important jobs. So yeah, that is bad.
Well, and it's also this idea of science advances one funeral at a time, and if there are fewer and fewer funerals, harder to get new ideas unless our aging people have beginners' minds, so to speak.
Yeah, I think that's reasonable. I think that is something worth thinking about. And I wrote a piece on this a long, long time ago on Medium about the tyranny of the long generation, which was specifically about cases where some field starts growing really fast, and so a lot of young people get into the field because they know they can get promoted fast, and then when growth stops, the average age of that field starts going up really, really fast, and the field starts getting more conservative. So now even if there are theoretically opportunities, young people actually don't want to go into that business. They don't want to take advantage of those opportunities. My favorite example of this is that I haven't been able to track down the actual reference for this, but apparently there was this extremely long period starting in the 1930s where nobody went from Harvard to Wall Street. They did other things. And actually, there's this book about, I think it's the Harvard Business School class of 1949, where a huge fraction of them ended up as CEOs or board chairs. They all got very rich, but most of them didn't go into finance. They went into some kind of industry instead. So if you think of someone like Warren Buffett, who gets started in his financial career in the 1950s, he was probably 15 years younger than the young people he was competing with. And unlike them, he didn't have a personal memory of the depression and, the stock market crash. Like he definitely knew it happened, but he didn't have this visceral sense of everything could collapse at any moment. And when he started his career, the Dow was still below where it was at the peak in 1929. So it sort of felt like the Dow can go up to about 380, and every time it's done that, which is once, it's gone straight down. So a lot of people in the industry would have just been extremely cautious, and they had to be survivors. Like they had to be cautious because it was just a really tough time to be managing money. It's also a tough time to be managing companies. So a lot of CEOs by 1950, they were whoever had been in charge in 1930 and had managed to keep the business alive. So they were extremely cautious, kept lots of cash, didn't want to borrow, didn't want to expand. And it created this huge opportunity for a younger generation. So there were people like the people running conglomerates were able to find lots and lots of small companies that had lots of assets that were whose value was not reflected on the company's books, or even cases where companies just had lots of cash on hand. You could buy out the company, extract the cash, and get the business for free or close to it. So it created a lot of potential energy, but it took a really long time. And there was this feedback loop where if you were young and ambitious, everyone with authority in the financial industry would tell you that you're doing something really wrong. Like you remind them of every friend they had who went broke in 1929. So don't do that. So it takes a while to overcome that inertia, and then you end up with this youth wave where this happened in finance in the 1960s, where all of the older people are retiring. The marginal dollar is run by a young person who doesn't remember how bad things can be, and so stocks go up. Everyone's really happy, but they're making a lot of the mistakes that the previous generation made, and that they have not learned about or forgotten about.
Yeah, and another well said. Another side note is I was chatting with Naval the other day about the sort of bull bear case for Biden in the upcoming election, and he said the bull case for Biden was that Democrats have figured out one mail in ballots, and two that they figured out voter turnout, or youth turnout, in that they're he's bullish on their ability to get more young people to show up for Biden, and for those two reasons, it would be tougher for Trump in this upcoming election.
Yeah, I went to a talk that Nate Silver did at the Manifest conference a while ago, and one of the things he said was that this is going to be the most boring election of his lifetime because both of the people who are like both of the likely front runners, everyone has an opinion on them. Like no one is going to change their mind about Donald Trump between now and the election. No one's going to change their mind about Joe Biden between now and the election. So it will be, like he said, like odds are going to be roughly 50-50. Everyone will be mad at him no matter what happens. And so he doesn't really want to bother. And I kind of feel that way too. Like it's just, it seems like a pretty, it's going to be a very boring election with like lots of noise, lots of outrage, but nothing really happening. It feels like, aside from just the actuarial question of will both of them make it to election day, I don't see why we shouldn't just like have a quick vote right now, get everything out of the way. Like, what could we possibly learn between now and election day that would make a difference to anything for anyone? And I think on the question of like youth turnout, I don't know. I guess I haven't looked at the most recent data, and there's always noise in this stuff. So the like a lot of people responded to Roe v. Wade being overturned, and that drove some turnout. But those things, every time something like that happens, like every time there's a blip in youth turnout, it feels like this is just this sea change, and everything is different forever. And then a couple cycles later, it kind of disappears into the noise. You rarely see these big inflections that just keep on going. Like there was a lot of noise about youth turnout after 2008 because it did help Obama on the margin. And he had a big impact on it, but then I guess the youth got pretty used to the idea, and then stopped caring so much.
Yeah, yeah, that makes sense.
I think there's also like the other thing that makes it boring is like the policy differences are just not as big. Like there are huge rhetorical differences, but like I've sort of speculated on this idea of Biden as state capacity Trumpism. Like if you do want the wall to get built, and then you also want China to be less central to world affairs, you want someone to go after them and to sanction things, like you sort of get very similar policies from both groups, with very different sound bites. It's just one group has a lot more staffers who kind of know their way around Washington, and is a bit more strategic in its decisions.
So, what are the biggest differences? Is it fair to would Trump be much harsher on immigration? I think we're letting 3 million people a year or something crazy like that, or is it pretty similar on immigration? And then also foreign policy. Does Trump have a radically different sort of take on either the Middle East or would he handle Ukraine, Russia differently, or what do you think are the biggest differences substantively, policy wise?
I think it is so hard to know what Trump is thinking, and it seems very influenced by who is presenting to him and what people are saying on Fox right now. So, there, I don't want to understate the fact that they are very different people with very different agendas. But I think one of the lessons from the Trump years was that someone can say a lot of really outrageous things and can promise all sorts of crazy stuff, and then it's a very different matter to actually get the federal government to do those things, and to do them on any reasonable timeline or with any degree of efficacy. So that sort of moderates the difference between them in practice. That one of them has lots of interesting ideas that will not get implemented, and then the other one has kind of the boring half measure version of that would get implemented and does it. On the immigration stuff, there's it. One of the complexities there is just this question of how rhetoric influences the actual behavior of current or prospective immigrants. And if you elect someone who has this vocal hardline view, it tends to discourage a lot of people from trying to immigrate in the first place. And I think that ends up, it has very different effects if we're considering like someone who is going around border checkpoints because they know they would not be able to get into the U.S. legally, but if they can get refugee status through some other means, then maybe they would be able to stay for a while. Like they have one decision function, and then if it's someone who they just finished their master's degree in physics at Stanford, and they really want to work for an American company, and we're going to like torment them for 8 years or something and not really give them any assurance that they can stay in the United States. Like those are very different scenarios that are both pretty responsive to rhetoric on immigration. And I think it does come back to the state capacity thing, where Trump actually did make some noises in the direction of wanting the U.S. to have a more skill-based immigration system and being in favor of skilled immigrants coming to the U.S. And that I believe is part of the AI executive order. There was this plan to at least write a report about potentially maybe someday streamlining the immigration process for AI researchers and other people associated with the industry. So, yeah, they end up kind of saying similar things. I think, marginally more confident in the Biden administration's ability to actually do that and change the wait times or the hit rate on immigrants who want to come to the U.S. Actually being able to do so and being able to work here and contribute, and B, like the hit rate on people deciding that that is actually like the U.S. is where they want to be. But yeah, I politics. It is this amazing IQ. Like you can turn your IQ, personal IQ, dial down as far as you want by getting really, really into politics and really, really into any individual race, and especially if you have an opinion about everything that happened in the presidential race, like in the last 24 hours, you can make yourself really, really dumb. But I try to avoid it. I know it happens. Like politics happens. Unfortunately, we can't completely escape it. But it's just it's less fun when a lot of the gap is just there's a lot of gap in just ability to implement anything reasonable. And so you're thinking on these two different axes of like, what things do I support in theory, and then what outcomes do I actually want? And if you're thinking about the outcomes you actually want, like how much can you actually influence who gets elected? I don't think either of us live in swing states. Probably are not going to be, making the key donation that puts someone over the top in some other swing state. So, yeah, it ends up. I think probably it gets more attention than it should. And going back to the question of macro and demographics, like a lot of the stuff that ends up mattering is this kind of gradual, slow moving stuff. Like nobody probably is going to run on a platform of we need to mark our Social Security and Medicare and Medicaid liabilities to market, and we need the government to do gap accounting and to disclose these massive liabilities, and then we need to manage those liabilities, et cetera. Like that sounds like even I am bored just suggesting this, even though I think it should be done. But that stuff probably matters more to political outcomes within the U.S. than a lot of the more niche policy ideas that get a lot more attention. For foreign policy, obviously, there's like a totally different calculus, and that I think, and you had asked about that. Like Trump does seem to be a lot more isolationist than most U.S. presidents. On the other hand, he's pretty impulsive, and so sort of like you can be isolationist 99% of the time, but if you order a nuclear first strike and you're one the 1% of the time that you're not an isolationist, yeah, that tends to not get you counted as one of the great peacemakers and peacekeepers of our time.
Yeah, well, good thing Trump is calm and level-headed, and yeah, if he wins, we'll all be able to trust everything will be will be okay. Um, the It's interesting. So I want to zoom out and talk about Zehan, who kind of put Peter Zehan, who through his books sort of put these ideas of demographics and kind of American decoupling in my head when I first thought of them a long time ago. And to radically summarize his view, and I'm going to ask where you differ, is he has this sort of thesis or explanation of, hey, post World War II to the Cold War, it made sense for U.S. to subsidize the world or create the sort of global economic system that really benefited other countries in some ways more than us in exchange for their protection against Soviets, against Russia, and that economic for security trade stopped making sense once Russia fell, but that we kept continuing it for decades because we just kind of didn't realize it. But that it was ultimately we were going to realize it, and he predicted this even ahead of Trump, who started a lot of this isolationist sort of rhetoric and activity, and that continued with Biden in some ways in terms of this broader decoupling. And his thesis is thus that any country that relied on American support would be in a tough spot, or even fall. In the case of China, he thinks it's going to implode because of their demographic challenges, because of their energy challenges, because other challenges. But then also countries that were strong before the U.S. set up the world order post World War II were going to be strong again. And he outlines, I think, four countries. Was it France, Turkey, I think Argentina, might be one other one, that we're going to be stronger. I'm curious where you were excited about what Zehan, where you agree with some of Zehan's thesis, and more interestingly, where you differ.
Yeah, sure. Like I found Xeon really refreshing because I used to be really into this idea of institutions as pretty much the only drivers of economic outcomes, and that if you have rule of law and free markets and pretty low taxes, that you generally win, and otherwise you don't. And that is like that's still directionally true. If you want to have a really high GDP per capita, you should look at whether or not it's legal to start a business and how difficult it is and things like that. But there are other elements to it. And I don't know if it was Zehan who pointed this out, but a few people have pointed out that you can look at these, like some of the early East Asia success stories. And the question was always like how close, like the success stories were generally countries with a port. And so you've got Hong Kong, you've got Singapore, and then later on you had South Korea, Japan, Taiwan, etc. Like they had these really nice growth paths, but they were all heavily export dependent. And so a lot of what they were doing initially was arbitraging that the fact that they had cheap labor and containerization made it easier to have a global supply chain. So it was. I think there was this kind of triumphalist sense, especially after the collapse of the Soviet Union, that it is actually ideology, and that if you have democratic capitalism, you win, and if you don't, you lose. And it's just a question of when. But then a lot of the East Asian economic growth stories, it was not very democratic, although quite capitalist. And then even within their capitalism, in a country like Japan, you definitely would not have described it as free market. South Korea, also not free market. Taiwan is this weird case where they did actually have this very fragmented economic system, but their most dominant global exporter was also a government supported one, Taiwan Semiconductor. So yeah, it's sometimes I think part of my shift has been that competent people can do a lot of good, and they sometimes they end up working in government, sometimes they end up working in the private sector, and you just need to be aware of where the really ambitious people are going and what they're working on, and make sure that that talent is being allocated efficiently and that they're addressing the meaningful problems. Um, so I think Zehan was like he's a good corrective for that. Where sometimes economic success really is that you have this good legal system, and sometimes economic success is no, you have lots of cropland and big rivers and lots of oil and iron and all of these other kind of boring tangible things. And I think we tend to underrate the importance of that stuff when there's a big ideological conflict and one side wins, or b just like globalization in some ways like it was this very Zehani phenomenon where one of the big drivers was just it got really really cheap to load stuff onto and off of very large ships, and so the cost of transporting 1 pound of stuff from Shenzhen to LA dropped by like an order of magnitude, and that just has a big impact. But it also led to this. It sort of I I was kind of misled by this when I first started thinking about global economic growth, and it just felt like it just happens by default, but it doesn't. It is a creation of circumstances. Those circumstances can change, and I think there was this view that after the USSR fell, that everyone else is going to also drift in the US direction. But it turns out that when someone like Xi Jinping talks about the collapse of the USSR, he doesn't say, well, they are communist and we are communist, and they proved that communism doesn't work, so we're going to get less communist over time. He says they were not communist enough and that they lost their legitimacy, and that all their problems started with the Sino-Soviet split, and if they had just stuck with Mao, they would still be like the communists would still be in charge, etc. So they just had a very very different view of what actually happened in the Cold War and why the winners won. I think with but I think it's entirely possible to overcorrect in either direction. So, like Zehan mentioned, Argentina as a potential rising power, and Argentina is just this weird economic outlier. I really like the Simon Kuznets line that you have there are four kinds of economies in the world. There's developing, developed, Japan, and Argentina. Like none of the rules actually make sense. Argentina's GDP gap with the U.S. used to be minuscule, and now it's massive. Um, so there's presumably, like, unless they just had this catastrophic run of bad luck that just kept on happening, there are presumably some institutional deficiencies that mean that if you have a country that is sort of maps to a lot of what made America so prosperous in the 19th century, if you have that but in the southern hemisphere instead, like, you don't necessarily get the same outcomes without having either similar institutions or at least like some level of institutional convergence on design patterns that actually work for mobilizing labor and capital to do useful things. So my guess is that it should be cyclical. Like, you sort of want to be like long Zehan when people are talking about the relentless march of democracy and freedom, and then you want to be short Zehan when people are talking about how the world's going to run out of oil, or like the world doesn't have enough copper to electrify, and so that's why we'll run out of oil, et cetera. Like, at some point, those things, they do matter on the margin. They do set your constraints, but they set the constraints of actual individual actors who are making specific choices.
Do you think Zehan is wildly wrong about China, or what's the mental model of thinking about China's future as it relates to demographics or energy?
I think so. Yeah, it is definitely very easy for Americans who don't speak Chinese to really say dumb things about China, and I mean that about myself, not Zehan. So like it's super tough to predict what will happen there. My suspicion is that so there's this long, so you can view these cycles of Chinese legitimacy, political legitimacy, since Mao won the Civil War, and cycle one is the Chinese Communist Party is legitimate because Mao won. And then cycle two, after some complicated, dicey circumstances, they switched to this model, the Deng Xiaoping model, where China, the CCP is legitimate because real GDP growth has been high for a long time, and so if you keep backing us, you keep getting richer. Your kids are richer than you, and that just continues. And in one, I think it's in the Ezra Vogel book, he actually puts a number on this. He says that the CCP is legitimate if real GDP per capita is growing at least 4% annually. And when the growth rate was more like 10%, at least the stated growth rate was 10%, that felt like a lot of margin of error. And now, the I don't know if I think the target is 5%, and I think the consensus view is they're definitely going to report that the GDP grew 5%, but probably the actual growth was going to be light. But at the same time, China, like, we have a lot more technologies of political control than we used to. I think if you're running a police state and you can get the engineering talent, you're in a way better situation than you were a decade or two ago, because they've got stuff like, everyone has a smartphone. The smartphone links your messages and your payments and your location all to one tech stack. It's unclear to me just how much access the state has to individual records of behavior and whatever, but my guess is they have as much access as they want, in emergency situations. So I think it's harder for China. Like, it's you can't really form an opposition party in China, but it's also even hard to do things like feel comfortable going to a protest, if you know that the fact that you went there is going to be known to the state and will always be in your file. And maybe the protest was okay when you went in 2023, but in retrospect, 5 years later, it was actually a very bad thing to do. And so now you're really in trouble. So there's a chilling effect there. The smartphones also, China mandated facial recognition to unlock phones in 2019. So it's also matched to your face. There are lots of security cameras, and China has sense time, so they have lots of tools for matching faces to identities. And it adds this weird level of meta stability. So one of the things I thought about in China is, they have this. It's well known their banking system has a lot of trouble right now. There's a lot of bad debt on the books, and one thing that sometimes happens when a country's banking system is threatened is that there are bank runs. And one of the things that makes a bank run really bad is just the visual of there's a very long, there's a line around the block to get into this bank and get your cash out. Um, but I think that they are actually in a better position to prevent bank runs. So essentially, China's like the minimum amount of capital you need for the Chinese banking system is a lot lower than it would be for a similarly levered banking system in a country that didn't have a one party state and lots of spyware. So I think that they can potentially stick around for a long time, but I think that model, the model where there's not as much economic growth, but there's nothing that you as an individual in China can do about it. Like that model just makes China less relevant in the world, and it naturally raises the question of Taiwan. Will they invade Taiwan or not? If they have decided they're going to, does it make sense for them to do it as soon as possible because the demographics get worse every year, or does it make sense to do it as late as possible because maybe China gets more and more ties to more and more countries, and they're waiting until they can get the nice vote from the UN passing a resolution saying that Taiwan was always part of China. Like maybe they're waiting for that. It's very opaque, and I sometimes wonder what their incentive is with respect to either exaggerating or understating their willingness to actually invade Taiwan. And and maybe the equilibrium for them is always talk about it as something that's definitely going to happen, but not with any specific date, because once you start putting dates on the calendar and once you start actually having to move your troops, it's really obvious that you're doing it. Like you can't really, as far as I know, you can't secretly execute an invasion of an entire island country. So there would be a long period where the U.S. can respond either through some combination of verbally just saying don't do it, and also by deploying ships and troops, and then things get messier. Then things get more exciting. But we don't seem to be there yet.
Yeah. The other critique to the Zehan worldview is more largely going back to your point. He's such a corrective against sort of the what people usually think determines success for societies, that causes him perhaps to underrate things like culture, things like talent, things like sort of institutions as you or governance as you put it, and sort of there are ideas that have there are countries that have rich resources and high good demographics, but are not set up for success because of their problems in other areas, and he doesn't quite give that enough shrift. And perhaps one thing he also underestimates just is technology, and he keeps sort of operating under current patterns. And this goes back to, or this relates to back to our demographics conversation, and it relates to something Robin Hanson has been writing a lot about, which is fertility. And he goes as far as to say, he's written this a few weeks ago, that he thinks there's going to be basically a dark age where the underpopulation is going to become a serious problem, and it will lead to sort of economic global collapse. And we'll have a dark period to which if you talk to someone in AI, they'll say, hey, we don't need as many people anymore, or we're not going to need as many people anymore 20 years from now. How do you square that circle? How do you think about that?
Yeah, it's a tough one. Like if you buy into the idea of an AI driven singularity, then this discussion doesn't matter. Like you can have 1,000 simulated children, and they'll all be earning 8 figures, building the Dyson sphere for you or whatever. So yeah, you I guess if that matters, it's the only thing that matters. But it's also very tough to predict.
But is there a version of not singularity? Is there a version where just AI just makes us so much more productive?
Right. I think that there's a version where it is basically the IT revolution just over a more compressed time frame and with more extreme results, both more extreme results in terms of increasing GDP by a measurable amount, but also increasing the variance in potential economic output between individuals. So I think that solves some problems, but like going Zehani enough, there's we don't have good ways to automate a lot of stuff in healthcare. We don't have good ways to automate a lot of stuff in. Well, I guess we have complicated ways to automate things in law enforcement. Like we could have facial, like cameras everywhere, ubiquitous facial recognition, and if you mug someone, you just can't, you can't access anything. Like the financial system shuts down, and we don't use cash anymore, so you starve until you turn yourself in, and then who knows what happens next. But like, barring stuff like that, like a lot of things the government spends money on are just things that don't scale very well, where the outcomes are really hard to measure, and where there is actually resistance to measuring the outcomes well. Healthcare, I think, is a good example of that. You actually need human beings walking through the hospital. You need someone to actually um, inject the thing, clean the wound, check on the patient, etc. Very hard to automate that stuff. Maybe there's some room for that, and there have definitely been advances in things like robotic surgery or mRNA vaccines. Like there are definitely improvements, but it seems like I guess with mRNA vaccines, like it could potentially be a really big deal for other illnesses, but we haven't found a revolutionary new way to get the FDA to move faster, other than like have a literal pandemic where they are literally the reason that things happen at whatever pace they do. Um, and but I think a lot of medical advances have been they've been about extending lifespans for very expensive diseases. So like the U.S. is a really good, like probably the best place to be a rich person with a very unusual medical problem. You can like probably the world's leading expert lives in America. Probably the best hospital to get your procedure done is in America, etc. But the everyday stuff, especially mitigating lifestyle related diseases, we're just not especially good at, and it just requires a lot of manual labor. I mean, it requires like it requires skilled labor, but it also requires people to actually physically do things with their hands, and so you can't automate that very easily. Like if you look at where robotics works really well, it is assembly line type stuff where you are doing like something with an N of millions. Then you can automate it really, really well. But there was this wonderful story in the Information a while back about Foxconn's efforts to replace some of its workers with robots. And one of the things it talked about was that the human hand and a tiny screw, they have co-evolved together for hundreds of years, where we've developed like the components on the assumption that there is this little motor. It has a really, really, really effective sensor. It can tell when it's twisting in too tight and it's going to break something. It can tell if it's not twisting in quite tight enough and the screw is loose. We have to kind of rethink a lot of these components. It would actually be interesting if someone starts setting an AI loose, with some CNC machines or whatever, and having it start to fabricate the intermediate tools and components you would need to build something if it's going to be built entirely by robots. So yeah, maybe we will actually have this wonderful manufacturing revolution, and the cost of an iPhone will drop by an order of magnitude, and we'll all be driving disposable cars that we just throw away when we've reached our destination or something. But it's probably the future of the economy is still pretty labor intensive, pretty labor limited, and actually there's this dynamic where when wages go up, the low wage, non scalable stuff, some of it just doesn't get done anymore. So there was this wonderful line from Agatha Christie talking about how when she, I think in the 1920s, that she thought that she would never be rich enough to have a car and never be too poor to have servants. And now most of us do not have servants. But you like one thing to expect if we have this wonderful AI future, if wages go way up, is that it makes way less sense to pay janitors. It makes way less sense to pay cashiers. So you actually have a world where there's like more trash on the ground in your office. The stains are there longer. Where no one smiles at you at a restaurant because their time is just worth more than that, and they're busy. So in some ways, like the world as it's experienced by someone who's middle class and above, the actual outcomes for services get worse, but then the outcomes for goods get way better. And I think that's a net good thing. But I think like the cyberpunk people were right when they imagined this kind of gritty, grimy future. That's actually what you get when your country gets really, really rich, and your country is so rich that nobody wants to work as a janitor anymore.
But do cyberpunk people mean it as aspirational or as a negative corollary or something when they imagine sort of the grimy, gritty world?
Yeah, they tend to imagine this as a pretty bad thing, but it's also just it's what you'd expect from pretty good things. Yeah, like if you want like a really like nice if you want access to lots of services, you want to live in a country where the country is very poor and you're not. And that's I think there's like that standard line from economists that if you're vacationing in a third world country, that is where you should get your haircut because haircuts are non-tradable, and so they're super cheap. Everyone wins.
Yeah, you you had a blog post on or in Capital Gains as well about this sort of this the greatest chart of the century, where Mark Andreessen and others like to point to it a lot, as it basically shows areas in which things are getting much more expensive, things like healthcare, education, housing, and things where products are getting much cheaper, like electronics. I can't TVs. I can't remember what were the other products. And
Toys.
toys, yeah. And the thing that people usually like to say is, hey, the things that are getting cheaper are typically in sort of free market, situations where things that are getting more expensive are typically heavily regulated, and thus, the prices are distorted, or they're not able to have much innovation because it's just harder to get into it. You think there's something there, but that doesn't quite paint the whole picture. But when do you unpack that a little bit?
Yeah, yeah. So I think the other distinction is that non-tradables have gotten really expensive and tradables have gotten really cheap, and that actually makes sense in a world where China used to be mostly agrarian and now has a gigantic manufacturing sector, but wages are still lowish compared to the U.S. Although that gap definitely shrank a lot. So that makes anything that can be manufactured at scale anywhere in the world get very cheap very fast. I did like one time I was looking at that chart and I realized that a lot of the things that have declined the most in price are things that they're like the kid consumption basket, and then the adult consumption basket of you have to buy a house and health insurance and pay for your kid's education. That's all gone way up in price. So my takeaway from that was if you got an allowance as a kid, you should give your kids an allowance that is the same or lower in nominal dollars because their consumption basket has deflated so much. But yeah, the big thing is like the big distinction, other than the regulatory treatment, is that the goods that have gone down the most are the tradable ones. And as you reach a point where the global labor market arbitrage is getting more and more tapped out, more of the costs are these unavoidable costs of raw materials and transportation, and so prices maybe those trends stabilize a little bit. And on the regulatory side, it's easier to regulate an industry that is purely domestic and non-tradable, because if you try to regulate a tradable industry, you end up just banning it in your country, and then people import the outputs of that industry from wherever it's less regulated. And you can try to impose restrictions in other countries, but it generally just doesn't work all that well. So there's a feedback loop there where like if you set zoning rules, and so that's a regulation on housing that restricts the supply of housing. If someone wants to live in a particular neighborhood, like they have to comply with those zoning rules. But if you set some rule on, what like the acceptable level of workplace injuries in a TV factory, then the TVs just go somewhere that doesn't, like the TV factories all go somewhere that does not have those rules.
Yeah, that's well explained. And so geared towards closing here, maybe going back to the Robin Hanson, if you are a believer that AI isn't going to automate most work soon, and thus not having enough people will lead to noticeable economic impact, are you a fertility doomer, like Robin, in terms of you're a believer that will have negative economic effect, like significant ones from sustained loss in or underpopulation, or do you think that something might change in terms of fertility trends, and will spike up again, or kind of get to replacement rate or more, or yeah, how do you think about that?
Yeah, the base case is that that won't happen, and that most developed countries will reproduce at below replacement, and that they will have this weird demographic pyramid where there are a lot of older savers and not as many younger workers, and that's somewhat self fulfilling. On the other hand, if you're willing to not live in San Francisco or New York, and if you're willing to not have a super prestigious job, you have a lot more opportunities to move to a city where you can buy a house with a yard and have kids. So, to some extent, like individuals do actually have that option. I don't know if there's like if some kind of policy guidance emerges from that. I think that probably we should just assume that the class of commentators and of people who do the granular research for legislators and the people who are working in finance and consulting and these kind of quasi regulatory type roles where they are allocating capital. If the U.S. had industrial planners, they would be the people who are currently allocating capital for KKR or BlackRock or whatever. So if that cohort tends to have fewer kids and to start having kids later, then probably the default policies are a little bit more biased towards the interests or goals of people who don't have kids. And there's not really an easy way to push back against that other than telling them to have kids and or telling them to rethink some of their views in light of the existence of children. It is kind of fun sometimes to read someone's policy ideas and then just have this shock of recognition that this person does not have kids, does not know anyone who has kids, and that is why they're wrong about this. But I might want to write a rebuttal, but I'm busy because I have kids and I have to provide for them and things. So yeah, I think we end up selecting for commentary from people who are part of a narrower demographic that doesn't want to have kids or is less excited to have kids, and as a consequence has more free time, and if they're willing to tolerate roommates, can live in very trendy places and have these high impact jobs.
It's interesting because some people say that the fertility has been impacted for broader trends, women's education, women's empowerment, career development, and thus, the opportunity cost of having kids is higher. That makes a lot of sense, and there are of course some amazing benefits that have come from that, and societies are largely happy with that. But then there's also this idea that dating markets have just made it much more difficult for men and women to align, basically because the way dating markets are set up, or the way the outcomes that they lead to tend to be where the top 20% of men compete for the top 80% of women. And so you have this sort of, I think they call it hypergamy, this sort of effect where the top men tend to have multiple women, and thus you don't have a lot of alignment. And of course you have trends like, women outpacing men on sort of the average, in terms of 60% of women are college students, 40% of men, or something to that effect. And thus you also have this dynamic where women want to date at a higher level, men who are above them or at the same level. They don't want to date down. And men are more flexible. But if 60% of women, college student women, are less likely to date non-college student men, and thus there just aren't enough good men. And so it seems like in order for the better alignment, to happen between men and women, either one of the few things needs to happen. Either men need to outpace women again, which seems unlikely at the averages. Of course, at the top, men outpace women. But on the averages, it seems like women are going to continue to outnumber men in college admissions or otherwise, at the median level. Or women change their standards, which also seems highly unlikely. And then maybe there's this sort of artificial wombs plus technology that can help men and women have kids kind of without marriage. So it seems like these trends are also making it more difficult. I'm curious if you have any edits to my characterization of these trends, and what you think is likely.
Okay, with the caveat that you said all of that, not me. Do not necessarily endorse all of it. I do think that I kind of feel bad being asked for advice on this, because I met my wife on OkCupid when OkCupid was good, and it was basically a site where it was like essay contests basically, and if you could write the most entertaining essay, you would find someone who also wrote an entertaining essay, and the two of you would exchange notes, and that would be the start of a wonderful, very nerdy relationship. My understanding, I have deleted the app, so I can't confirm this directly. My understanding is that it's less about that now, and a lot more about swiping on pictures and things like that. So I don't know. It sounds like a hellhole. I would hate to be single right now, and it sounds like a nightmare. I'm not. Yeah, I don't know how to upset the equilibrium, but like it's definitely true that if there's a large college educated wage premium, and if women prefer dating someone who is at or above their socioeconomic status, and men are going to college less often than women, like yeah, you end up with fewer men who hit the standard, and yeah, I don't actually know. I have no idea what to do about that. I think that there's like you can definitely imagine policy proposals where it's something like we require, we're going to require global, national affirmative action for young men until we get to the point where surveys show that most people who are single by choice, and like everyone is happily paired off. That's probably not going to fly. I don't actually think anyone wants anything like that. But yeah, I think that like broadly, it is good to be aware of mismatched incentives. It's good to be aware of cases where you can satisfy on one dimension, but you're losing something on another dimension. You do ultimately have to prioritize. I suspect that dating sites, they seem to have a pretty bad influence on the world. I had a line a while ago in a diff piece on Match Group where I said that you can't treat Hungary as being serious about their fertility policies unless they nationalize all the dating sites, and the best paid engineers and product managers in all of the country are all working for a state-run dating site that is explicitly designed to pair people off into happy marriages where they will have lots and lots of kids and keep the pension system solvent. Like maybe you do have to treat this as actually something that is like maybe you have to treat the dating app space as something that should be a legitimate policy concern. Like you can view it as just like any other negative externality. There was a time when someone owning a factory somewhere felt like they had the right to emit whatever they wanted to emit and dump waste chemicals in the water. And now we've decided that actually no, those they need to be cognizant of those externalities, and they need to limit the damage and pay for the damage that they cause. I think, but once you start talking about that with dating sites, you have these much more fundamental questions, because there's definitely going to be a population that's happy with them. There's a population that's satisfied with them. There's a population that's creeped out by the possibility of the government saying not enough people are getting married, and so we need to nationalize Tinder. Um, so yeah, you end up with tough questions. I have talked to people who are building alternative dating apps and dating systems, and a lot of those startups, they're born out of this loathing for the current system, and it's unfortunate that a lot of these it tends to be just really tough to get these alternative systems to work. Like the unit economics are a whole lot better if people are endlessly dating and always unsatisfied and don't pair off. There are all sorts of agency problems if you have a dating site that is like, we're going to match you for free, but if you get married, you have to pay us $50,000 or something. That creates all sorts of its own problems. Um, and I don't know what to do about that specifically. I think that like all of the policy angles are abhorrent to at least some people. Some of them are abhorrent to nearly everybody. But clearly, we currently live in a bad equilibrium. Like maybe one possibility is just we will hopefully see some shift in social norms where it does become maybe less socially acceptable to meet someone online, and maybe other ways of meeting people that are more organic and natural, and kind of less about stack ranking everyone and setting this insanely high percentile cutoff for who you will even respond to a message from. Like maybe that's better, because like that is sometimes how we deal with the adverse consequences of technology. I think I talked on the last episode about the Clay Shirky thing with gin, and how it just annihilated like this generation, and how what people eventually concluded was like, we're not going to make it illegal. We're going to have this strong social norm that you don't drink gin at breakfast, and maybe we'll have like a similar reaction against dating sites, and it will be seen as the low status thing that it once was in the 80s and 90s. But then I'll have to be really, really careful to explain to everyone in the world that dating sites were cool and pro-social for this very, very narrow window of time in which I used them, and then they became bad and have stayed bad ever since.
Bring back OKQ.
But I don't know. I don't think I will solve. I don't think I will solve like the big questions on gender and the big questions on miserable, like how miserable it is to be single and young in the United States today. Unfortunately, wish I had good answers for that. Would make a lot of people happy, but no, it's mostly tough questions.
Yeah, we can't solve everyone's problem here. Let's wrap on that. This has been a great deep dive into demographics, deglobalization, and some stuff on fertility as well. The next episode we'll also do a deep dive on some of your other pieces that you've done for both capital gains and also recent stuff on the diff. Bern, this is great as always. Until next time.
Yes, indeed. Had a good time. All right.
Thanks for listening to The Riff. Please go follow and subscribe, give us 5 stars, and check out Bern's excellent newsletter, The Diff, if you haven't already.